Hi there, chickadees. Welcome back. I wanted to talk today about one of my favorite subjects. Not, it's not, but we need to cover it here in the cappuccino tier for sure. I'm talking about counting pips. Counting pips, you have to understand where to look in the pair that you're trading because they're all different. Some have 5 numbers after the decimal, some have 2 numbers, some have big numbers in front. Like, what are you counting before, after, what placement on the decimals? They're all a little bit different. So we're going to go over all of that so you can get a rough estimate on what you're going to make, what you could potentially make, and understanding that is important. So I know there's some videos out there on pips, so I'm not really going to review all that, but I made a little document. So let's get over to that, and I'll see you over there. So I have a little document here that we're going to chunk our way through, but basically what I just said, you have to understand how pips work on what you're trading so you know what your potential profit will be. It's pretty important. You can't go in there swinging blind, and you can use a pip calculator, but honestly, they're only going to work if you put in that initial stop loss. And that's not part of my strategy. So you're either going to swear by it or you don't swear by it, but I don't need it. I don't use a pip calculator because I don't put in that stop loss. It's going to tell you your risk to reward. And I'm doing something a little bit different because I am the unconventional trader. I did take my face off of here also. I usually have it on here 100% of the time. And I will preface this with saying there's a lot of noise outside my window and I have it open. So if I have to pause to get rid of that distraction, I definitely will do that. So again, pip is just a unit of measurement that tells you the difference between the two pairs that you're trading. That could be any market, that could be metals, that could be the indices, that could be any kind of crypto or altcoin, that could be any major pair, minor pair, an exotic pair. So they're not wildly different, but there are some differences. And I will tell you a little story about that. So when I first started training, I had a trading mentor, and he would tell me that I needed to tell him how I did that day by telling him how many pips I caught. And this was really difficult for me because I traded so many things. When I was new, I honestly, I took trades, I followed trades, I was learning, I didn't really understand everything that I understand now. So I was doing a lot. I might be in Euro USD, I might be in gold, I might be in oil or Bitcoin or XRP or multiple markets at any given time in one account. Um, so when I was told to tell me how many pips he caught, and calculating the pips was different for each pair, it was difficult for me, and I got frustrated because they're all different. All the numbers are different. Am I counting before the decimal point? Am I counting 2 places after the decimal point? Where am I starting to count? It was a lot for me. And I'm just being transparent because I almost feel that it's a lot for many of you out there. So what I would do was just tell him I made $200 that day. I made $80 that day. I made $54. And he's like, I said, I'm not doing it. Not because I can't. It would take me time to do that. And that's not really why I wanted to spend my time. I'm doing well. How about that? So that was my journey with counting pips. And now it's a little bit different. But I wanted to tell you that story. And once you understand how it's done, you understand how it's done. And I don't feel bad about that. There's a lot of things that you can do differently from someone else. You get from, using different trading strategies even. making bread, making a salad, making your bed, doing a puzzle Sudoku, whatever, you might do it differently than someone else. So what I'm saying is that once you learn how to count pips, then you kind of always have it. And it's a good skill to have. But again, now I understand all that. So let's get on to the crux of this video and let me show you how to count some pips. So like I said, they're all different, okay? And if you're using your base currency, you're looking at, that's always like a dollar. Like what is the euro compared, $1 of a euro compared to the US dollar? Okay, well, the US dollar is worth more because the US dollar and equivalent to a euro is 108. But here's how you're counting pips. And I tried to make the screen really big because it's helpful for me as well as I go through these slides. So when you're counting Forex pairs with 5 digits after the decimal point, that little green one at the end, I mean, if the euro is worth $1.08, in the real world, do we really care about these tiny numbers? Well, we care about these blue ones when we're trading because those are the pips. And I guarantee up until you entered the trading world, you never even heard of a pip. You didn't know what it was, the pipettes, we're thinking like the Congo line dancers or something. No. So you want to understand the third and the fourth number on Forex pairs with 5 digits. Okay. And that's all of them except one. There's always some exception to the rule. Don't count this little green one. This is so small. This is a pipette. You don't even need to count it. You could, but it's so small. So basically with when you're counting Forex pairs, you're just going to count the third and the fourth digits in. You can see if you were selling Euro USD, it went from 70 to 55. You'd gain 15 pips. Boom, I could say to my trading mentor, I made 15 pips today. Okay, or if it was going the other way, you might have lost. If you were in a sell and it went up, you would be negative 15 pips. It went in the other direction. But again, this is just third grade double digit subtraction. This is base 10 math. I'm hoping that everyone can do base 10 math. Maybe it's still a struggle to subtract 19 from 72. You'll get it. Okay. You just have to know your numbers. And technically I said there's this little 4 pipette hanging out there, but who's counting that? So that's an example of counting pips on Forex pairs. Now the only exception to that is our little nudgy friend, the yen, JPY. Okay. So even though this does have 5 digits, I just didn't separate this little pipette off right here. I mean, I could do that just for yucks to keep it consistent. So with the yen, you're going to count the first and the second number in. So if it went from 145 to 140, 5 pip difference. Never mind about these little tiny numbers. Okay. Oh, and here was my example of harder base 10 math. If it went from 132 to 115, that's a 17 pip difference. And hopefully you're in the right direction, selling or buying. But how does that translate into money? Like, we're interested in the money. What did you make? No one cares outside of the trading world how many pips you caught today. No one cares. So that makes me want to go back to talk about contract size. And if you've been on this platform before, this is going in cappuccino. In espresso, oh gosh, I wrote it down. In espresso video number 20, I talk about contract sizes. So let's review. Let me say what I want to say first, and then I'll show you what I have on my screen because I don't want to confuse you. So the contract size matters. Size matters. Makes me want to bring up my phone for a second. So let me bring up my phone for a second. And hold on. So here is a demo account that I was just showing you. This is demo. What I wanted to show you on here, and it's in that Espresso 20 video called, yeah, I think it's called contract size. Like, don't quote me on that. If you go back to the trading screen and you press on any pair, let's go into GBP USD. It's the third one down. If you tap that and you go to the third one down and look at symbol properties, this is the area that's going to give you the contract size. So fourth one down, there's a delay here. Fourth one down is the contract size. And you can see that it is 100,000. Forex pairs have 100,000 contract size. And really what that means is that just the size of the transaction that's being traded by the brokers. They deal in standard contract sizes of 100,000. Well, here's the thing. If you've seen a lot size video from me here, we are not typically trading standard lot sizes. That's big. That's a big number. Okay. That's $100 a pip or not. That's a lot. So we're trading something called a micro lot. But let me go back. And so you can see it was a loud noise. You can see that US JPY, is that also 100,000? Okay, let's go to one. Let's go to US 30. US 30 is not 100,000 standard lot size. Okay, it's more powerful than that, believe it or not. It's a smaller number, but it's more powerful. It has a contract size of 100. And something like Bitcoin and gold have a contract size of 1. Okay, so this is going to matter in the power behind the punch of your trading. And you again, when in the video, no one really ever talks about it, but you might see if you trade a 0.01 lot size at Bitcoin, it's a whole lot smaller than maybe Euro USD. Okay, the size and the chunk is a lot bigger, and you have to understand that. So let me go back to what I wanted to show you. I just wanted to show you that on my phone. Okay, so now we're back to my screen. Here's what I want to show you, these contract sizes right here. We're trading this, my friend. We're trading a micro lot, and I can show you how the math works so you can figure out what you're making. It's really that simple. You don't need a calculator. It's not hard. I did it. So this just means you're trading at a 0.01. You're trading $1,000 contract. This is what most traders trade. The contract size is certainly different on different trading platforms. But most of us trade micro contracts, and micro contracts are a good option because they're safer for traders and there's less risk. I do know people who trade standard lot sizes, and I do know people who trade this little nano one. It's kind of for prop trading, and that's a whole different thing. But let's move on. There's a whole video on contract sizes, like I said, but you just need to understand that they are different across the board for different markets. So where am I? I am moving on. Did we do JPY? Oh, we did. Okay, so we're just counting the first and second number after the decimal point. So let's look at something like gold. Let's look at something like gold. Okay, so gold is, we're counting pips, the second digit after, this is kind of like base 10. You can see the second digit after the decimal point goes up by one pip, goes up by 36 pips. Goes up by 28 on the other, or 1 on the other side. This counts as 100 pips. This little sucker right here counts as 100 now. So that would be a good day, wouldn't it? That would be a good day. But I tried to do some basic math down here because I had a gold trade open. I don't think I do anymore. So on my trading screen, I had entered at 1895.32. And at that time, I took a little screenshot and wrote down the numbers. It was at 1925.10. That's an increase. It's just basic math. Basic math. 1925.10 minus 1895, 29.78. Now this is at a micro lot size of a 0.01, which basically means it's 1 because we're just basically dividing this number and taking off. Well, actually, when you take the contract size, that's a standard size, and you take off and switch it down to a micro, you're just taking off these zeros. So we're actually multiplying 29.78 times 1, which easy math. What'd you make today, Cindy? How many pips did you catch? Oh, about 30. I made about $30. That's really easy. And of course, your broker does this on your screen, but I want you to understand it. Okay, and I'm going to leave this in here so that you can see all of that. Now, Bitcoin is another beast. Okay, this is one I took from a screenshot the other day. Bitcoin went up by 60.55 pips. Okay, so you're counting Bitcoin 2 digits before the decimal point. This is just like fluffy fluff here, cents. Okay, so what this translates into for a contract size of 1 is really 61 pips at a lot size of 1 is really 61 cents. Okay, not too glamorous, I'm telling you. And then you add in, maybe you have a different lot size. So on my trade, I had a lot size 0.05 instead of a 0.01. So hallelujah, just basic multiplication. So it was really the 6055 times 5, right? 303.055. And I took a little screenshot of it. I don't know if you can see that. That's really what it translated into. I entered here. I didn't reach my TP yet. I don't know. I just took a screenshot for you, and I was down, right? I was down because I was in a sell. When I looked up here, I was taking the difference like it was a buy, but I was in a sell. So I was actually down 303 because this is a 0.05. You just have to like look at the numbers, go slow, understand what's going on. We did that. I wanted to show you something else. Let me see if I can find it, or let me maybe type it here. Okay, so I was typing all this out for you, and I'm like, why don't I, on my calculator to type it out to show you, I'm like, why don't I just show you? So you might need to go through this a couple times just to go, oh, I get it, and maybe use it as reference if this is how you want to do it. But so I'm just going to put in those 2 numbers again that I think that I was showing you. So my trade was my Euro CAD, I believe. I almost forget what it was now. It doesn't matter. 1.09 023. That was my profit. Minus 1.08879. Teeny tiny number. I don't know what this means. 0.00144. Okay, so that's the difference, but how do we translate into money? So remember I said standard contract sizes are 100,000 contract size. We're not trading standard for 100,000. We're trading safe and sound. We're trading micro lots. So that's a 0.01, and then the rest is just multiplication. So at a 0.01, here's what it looks like. We're gonna take this number and then we're gonna divide it by, and this is gonna come back to you when I say it. It's gonna all come back to you. It's what grade math? 5th grade math. It's place values on the other side of the decimal, but super easy. So I wanted to show you here. So you're going to divide this number by point. We said that this was contract size of 100. So we're going to divide it to the hundredths place. Oh, no, it was 1,000. Sorry, micro was 1,000. So we're going to divide it by the thousandths place on the other side of the decimal. So 0 would be the tens place, 10th, a tenth of something. Another 0 would be the hundredth place. And this third place is the thousandth place. Look at that. $1.44. My trade was $1.44 when I closed it up. And I was just doing these trades to show you. My trade was literally $1.44. Let me go back and show you that. So again, I just took the difference of the two trades and got that number with all the zeros in front of it and divided it by the contract size. We're trading divided by hundredths. So let me show you what that looks like. Is this it? Nope. Hold on. Let me show you what that looks like. But I don't want to float through all these screens. So I do not want to float through all these screens. Where did that go? Why is it 140? Hold on. Okay, I did find it. I just got confused. I'm like, wait, none of these numbers are right. That's because I took the math. I took the math from this trade, which was from a 0.02. So let me show you how that works out. Sorry for that confusion. I'm like, where's my 144? So here's the trade that I'm talking about right here. I'm talking about this one. These are the numbers that I was using. Okay, I closed it out. And this is where I got my 144, but oops, it's a 0.02. So it just multiplied it times 2. So if you want to figure out your pips on the fly, okay, just take your math, subtract it, add it, whatever you're buying or selling, and then you're just going to divide it by that hundredths place, divide it by 0.001, and that's going to give you what you're going to make if you're not putting in stop loss. Okay, but at some point you're going to have a latte stop loss right where it should be, right here. But again, I was showing these trades simply for demonstration purposes on how you're counting pips. And you can see that even this one, this is what confused me. I'm like, where's that number? This one, the numbers were different. The numbers were different than the numbers that I had put in. Okay, it was 83 and 79. So that's the difference of 4. And that's why it wasn't 144. I'm like, where's that trade? What did I do wrong? But these are some things that you want to be able to understand if you need to understand them. So I hope that wasn't, I hope that wasn't confusing. Go through these numbers again. You're going to see how easy it is to count pips and where you should be counting from. And I realized that the MT4 broker obviously does it for you, but you want to understand where that came from. And now I can tell you, I don't know many people who can do what I just did for you so that you can understand. We are not trading standard lots. If we are, we would divide it by 0.0001 1. And we're not, we're just dividing it by 0.001, which is the thousandth place, because a micro lot, that's what we're trading, because we're safe traders, is 3 decimal places in on basic base 10 math. So that being said, my friends, I'm going to end this recording, and we're going to file this under how to calculate pips and understanding contract size and lot sizes. All right, have a nice day.